After 4 long years of trading crypto and going back and forth between different time frames, different indicators, different strategies all around, I finally narrowed it down to one simple strategy that helps me make stress-free trades every day where I can guarantee my income over a month's period of time. So if you would like to see this simple strategy, please keep watching. I'm going to go over and break down the details of it, including what to look for on certain candles, how to mark your lines for entry. Also going to go over a little bit with the Fibonacci and where you need to be setting your stop loss if you do need to get out. Remember, not every trade will be a winner, but as long as you're remaining in profit for the week or the month, this is a profitable business. All right, so here are the general rules for this strategy, and I'm going to go quickly over the 2 trades I took this morning, where I went wrong and where I went right, so you guys can do the same. But if we first move, I'm just going to move this back to that 8:30 time period. And we're first going to start out by marking our daily candle high and candle low, or previous day candle high and candle low. So you'll see that would be this candle right here. We can just mark it top to bottom. So we'll mark that. And what I usually notice is a lot of times it'll bounce throughout the day in between those 2 zones based on the previous day high and low. So that's why I mark that area. It usually helps me with my take profit levels as well. So next we're going to jump to the 5-minute time frame. And we're actually going to mark out our 8:30 to 8:35 a.m. time range, which is central. So, or 9:30 a.m. Eastern. That's just my time period. So here's our 8:30 central time a.m. And then here is our actual end of 8:35 candle. So this is where I lost my one trade. This is where I just hopped in. I didn't look at the overall trend. I didn't do my overall daily analysis or anything like that. Had I seen the overall downtrend, I would have not taken a long there. Always go with the trend. So if the trend is down, I'm probably looking for shorts today. It helps me win a lot more trades just going with the trend in general. So you can see we did have a breakout here, and that was my losing trade. I went ahead and took a long, basically right at that 5-minute breaking entry point, and it just tanked downward. So that was where I screwed up, taking a long instead of a short on this downtrend. Do not do the same thing, and make sure you check before you enter a trade what trend the direction is going in, because I just hopped in, logged in, and placed a trade. That's basically all I did. But as you can see here, we're waiting for a break either to the upside or to this downside here. So we want a strong break too. This wasn't necessarily too strong. We had some big bullish candles here, but it wasn't as strong as I would like it to be, especially if you move to that 5-minute time frame. You'll notice it's still ticking here. So we'll play it forward, and this candle hasn't even ended. So it wasn't that strong of a break on the 5-minute time frame. You want a nice strong break to the upside in order for that to be long, maybe even possibly breaking this higher high here to confirm we're in a long trend. However, we did not break that, hence my losing trade. And now we are headed towards the downside. So what we are looking for here, we have this break on the 5-minute opening range. We can go ahead and take our fib from bottom to top, and we can match up our 0.618 or 0.5 with a 5-minute fair value gap. And this fair value gap indicator is on Lux Algo. If you just type in fair value gap, Lux Algo indicator, and it'll automatically show fair value gaps for you. So you'll see we have this nice red fair value gap right at that 0.5 level. So that's where I was kind of aiming for. If you're worried about missing out on a trade, which you never should be, there's always more trades in the day, you can go ahead and play this and set your stop loss just above that fair value gap candle right here. All right. So here is our 5-minute break. Sometimes it'll just hit this and retest it and then go down. But other times you're going to see it hit that 0.618 and 0.5, and it'll line up nicely with that fair value gap. So we'll go ahead and play this out here. See if it comes up. So we do have to make an adjustment to our fib. So Here's this downward area. So now we're waiting for this 0.5. We had to move our fib down to this line. So you have to move your fib with the trend here. So it came up, hit our 0.618. We'd move our entry down here, probably aiming for that 0.618. Stop loss right above that 0.382 / fair value gap candle here. And we are going to aim for that 1.272. I did not aim for the 1.618 simply because it's below our previous day low and I didn't know if it could make it. A lot of the times I'll see it hit this previous day low and it'll make a turnaround. So I didn't want to get too risky with that area here. So we will go ahead and you'll see it hit our 0.618 here. It's now coming up, just missed our 0.5. Now it has hit our 0.5. And there is our take profit level right at that 1.272. So it'd be in and out of this trade within, what was that? Probably about an hour or so. So on that 1 minute time frame. But those are the main confluences I'm looking for. Look for that break on the 5 minute opening range. Once it makes that break, you can either set your entry right at that break or aim for that 0.618 or 0.5 level. And then aim for your take profit level at that 1.272, 1.618, or 2.272. Like I said, I just aimed for that 1.272 simply because my previous day low was right here. I didn't know if it could break through. A lot of times it'll get close to those ranges and then want to shoot back up to that previous day high, which we would be liquidated pretty quickly out of. So I'm now going to go over how you would actually enter this trade in MexC here. And then I'm going to show you an Asia opening trade. So how we would take a short here, you would go ahead, your stop loss would be just above this fair value on the 5 minute time frame, this fair value / candle here. And you want to make sure it doesn't wick through and stop you out. So I've been doing a manual stop loss, which is a little bit more risky. However, the profits you do make from this trading kind of evens out. So you can put your stop loss just above that fair value gap if you're trying to remain safe. I did have one just wick me out, so that's why I've been doing a manual stop loss lately. But then you can aim your take profit down here. So you can see we have that 3-to-1 risk reward ratio we're looking for. This is the quantity you would enter on MexC. You can just double click on this. So let's say you have $1,000 account size. You want to risk 10% of your account or $100. You can put that in there. There's the quantity you can throw into MexC, which would be right here. So our price entry is 127.47 with that fair value gap. Our quantity is 166 we saw. You can go ahead and open a short. It will also give you your liquidation price. I am doing a isolated 40x leverage here, so make sure it's isolated, not cross. You can go up to 40 or 60x is typically the amount I go to for leverage. And then here's your short liquidation price. So we can see we're at like 130, so it's all the way up there. We're nowhere near liquidation. We're even above here. So that is how you would take that trade. This is where you would set your stop loss, set your take profit. All right, so we are just going to do a random bar replay here. This is what, September of 24. So we're going to look to mark out our previous day high and low first on this candle here. So we'll go ahead, mark this previous day candle, high and low. And then we're going to jump to the 5 minute. And we're going to look for 8:30 to 8:35 p.m. here. So I'll speed this up a little. And we will mark our high and low here. 8:30 to 8:35. We can adjust this to make it a little more perfect. So we went ahead and marked out our 5 minute low and high 8:30 to 8:35 p.m. here. You'll see we had a nice bearish candle to the downside. And we can simply enter at this retest if we would like. You'll also see the 0.5 and 0.618 match up nicely around there. And you can either aim for that 2-to-1 risk reward. I would probably put my stop loss just above 0.382, and maybe this wick here with this fair value gap can do something like that or that. Kind of hard to tell with that wick there, but we can aim for this 1.272 area. This is a lot of choppy type of price action. You're not seeing huge down candles like these ones, but you got some choppy price action, so I'd probably just be aiming for that 1.272. So let's say we put our entry at the retest and go for that 1.272 take profit. Coming up, dancing around, almost hit our stop loss. That's why I put it right above that wick. But we will keep on moving. Almost comes up and hits our stop loss again. And then finally hits our take profit. So that was a lot of choppy price action. This is kind of more of a scary play, but it did come down and hit it. Like I said, usually just go with the trend and you'll be pretty safe. Sometimes you'll get these resistance areas. If you were to take along, you would have a less likely chance of winning this trade. It's just how it is. But you'll see that would have been a 2.53 risk to reward. Those are just a couple of trades, kind of random trades I wanted to show you guys to see how this would work out. Like I said, you're looking for that break. You can look at that 0.618, 0.5, lining up with fair value gaps as additional confluences. If you just want to keep it simple, aim for a 2-to-1 risk reward ratio. And also just set your entry at that 5-minute retest on that purple line here as we saw. But just to keep it simple, you guys can see how this works out and plays out.